Hey guys, thank you so much for stopping by to watch another episode here at All I See Is W. Let's say if you're new to this channel, today I'm going to be sharing with you three value add stocks in the biotech and in the medical device arena where I personally think that it can add so much value to your investment portfolio. First off, I'm not a financial advisor. Please take my information as guidance. Today I'll be sharing with you my forecast on the actual price of each company heading into the long term position, as well as giving you stock news updates on each company and why it's positioned to start growing in terms of future valuation. Let's say if you're new to this channel, I would highly appreciate it if you subscribe to this channel where we can all add value, share information, and grow together in the long term, where the goal is to build on positive proceeds and leading with an altruistic mindset. Before I begin, though, I'd like to just share with you a book that I'm actually reading at this time, and it's called Catapult, written by Puneet Dillon. And this is basically teaching you how to think like a corporate athlete to strengthen your resilience. I'm actually close to finish with this book, and I personally think that it's really value add with trying to develop a growth mindset and to better myself as not only an individual in the corporate world, but also improving on my well-being and using that as energy fuel to align myself with my purpose in life. Well, let's begin. Okay, the first ticker I wanted to share with you today is iBio. This is a plant-based technology company that is headquartered in Texas. In fact, they are branching out to the most innovative central hub for biotechnology companies. That's also in San Diego. Today, the company announced that it establishes oncology drug discovery pipeline with three new antibody programs. In fact, the company announced this news 15 minutes after the closure of the stock market, and in the aftermarket trading, the share price had gone up close to about 10 cents. So overall, the share price had gone up by about close to 11%, and that's looking very solid because we've been seeing a slight downward dip with iBio. However, this really just shows you the business strategy that Tom Isett is establishing, and this really shows the versatility of the company, not only focused on the iBio 200 platform for COVID-19, but also building ground for the fibrosis, swine flu vaccines, and now it just shows that it has various products in the pipeline working with a company here called Fair Journey. And Fair Journey actually has more than 100 employees, and that's looking very solid, being able to partner up with a company that has over 100 employees. And the intent is to work together by leveraging the Fast Farm system. And iBio believes that with their combination of speeding to clinic advantages using the glycan technologies with the antibody optimization technologies provided by Fair Journey, it will help enable the company to develop differentiated cancer therapeutic antibodies with improved antibody dependent cell mediated cytotoxicity. That's coming from iBio's chief scientific officer. Now, we know that Dr. Brenner was recently brought on board. As you can see, he's focused with a laser sharp focus executing on the company's business strategy. And this is looking very solid. And from the CEO of Fair Journey, the statement noted was that our experience in antibody discovery for use in oncology has grown in recent years, with a number of undisclosed collaborations rapidly moving towards the clinic. We are excited to work with an innovator like iBio, which we believe has the ability to change the bioprocess paradigm using its proprietary glycosylation technologies to enhance human anti-cancer antibody development. So as you can see, while working with a clinical research organization with fair journey, that just tells you that iBio has partnerships with a number of companies out in the biotech arena, and that just shows, in addition to why iBio will grow in the long term. And just looking at the stock data as of today, we see that it closed at about 140. However, including in the aftermarket, it's now hovering in the $1.50. I personally think that in Q3 we can easily break $3. We know that in the prior year, back in Q2, Q3, the share price had shot up all the way up to like $7. However, that was driven with COVID-19 news. But as you can see, slow and steady wins the race with iBio. And I'm forecasting that in the long term, if you hold this company, it will just continue to trend up, with the 200-day moving average continually rising, where you will see an upward growth. Because before COVID times, I mean, iBio was at around like 30 cents. So if you look at where the current share price is today compared to where it was previously, that's about a 4x increase, not including the high peak when it ran all the way up to $7. Now, if you hold this long term, I easily think that iBio can reach double-digit share price range. So let's not lose sight of the value iBio can bring. And with news to come, I foresee that Tom Isay is going to execute on this business strategy and lead the company in the right direction, and ultimately getting into the double-digit share price range where we see the value and price aligned to what the company is working on. So that's that with iBio. I'm going to go ahead and pivot over to the next company I'll share with you. That is Skye Bioscience, a biotechnology company that is based out in San Diego, where their mission and purpose is unlocking the pharmaceutical potential of cannabinoids. And their motto is "Sky is limitless." And basically, this is a biopharmaceutical company engineering proprietary cannabinoid derivatives to treat glaucoma and other diseases with significant unmet medical needs. In fact, their drug product called THC VHS, which is a prodrug, that molecule is a modified molecule from THC, because you can't patent just the THC alone, because that's an innate molecule. However, this company has actually modified the molecule by adding amino acids so that it can actually travel through the eye of a glaucoma patient. So once it reaches the patient's eye, then the actual THC will bind to the receptors of a glaucoma patient and thus reduce intraocular pressure. That's very fascinating, because today I haven't heard of any company leveraging cannabinoids by modifying the drug product so that it can easily deliver into the eye and not provide you the systemic therapeutic effect, such as the psychoactive drug component, but specifically targeting the ocular disease states. And that's why I firmly believe that this technology is going to take off once there's just more information that will be available, and milestones for this company will come. And let's just take a look at the company's overall profile. And we know that this company is in the healthcare, specifically in the biotechnology industry, based out in San Diego. I like looking at financials, so let's take a look at the balance sheet. So we're looking at a single point of data in time, where we're looking at end of December 31st, 2020 and end of March 31st, 2021. Just quickly looking at the accounting equation variables: assets equals liabilities plus stockholders' equity, right? So as you can see, assets have grown when we compare 2020 Q4 to Q1 2021. In fact, it more than doubled, right? Now, the risk implications would be total current liabilities, right? So we see this at 2020 nearing close to 800,000. That's a slight increase up to 1,003,084, which isn't quite significant when you compare the asset growth. So that's looking very solid, and based on the stockholders' equity, we see an increase here from the 2020 year. So that's looking very solid based on the financial statements while looking at the balance sheet. Let's take a look at the cash flow to understand the positive return on cash flow, how cash is flowing in and out with this company, and does it have a well-maintained solvency, and how's the liquidity look with this company. I know that its current ratio is above 1, which means that it's a solvent company, meaning that it can take care of itself in phase 1, phase 2 clinical trials. And that's very positive news because this company has the funds to enroll itself and be able to provide support heading into phase 1 clinical trials. Now, based on the accounts payable, this is basically the risk here when we look at accounts payable. As you can see, 2021 it has reduced significantly, so that's looking very promising, right? And in terms of net loss, cash flows from operating activities, right? That's the money you spend in operations. We see a decrease as well, so that just tells you that the business strategy is heading in the right direction, lowering operational costs. That's a good thing, where this company is preserving the cash flow to spend it in the areas that are needed, and that will be anticipated to leverage the money in phase 1, phase 2, phase 3 clinical trials. Now, looking at net cash used in operating activities, this is looking very good because we don't see a huge uptick in the cash flow for operating activities, while we know that the company is beginning to grow exponentially at the same time. Now, based on the net increase, we see that the net increase in cash is growing significantly, right? Compared to 2020, we see that in 2021, we see that it's at 2 million compared to a loss of 1 million. That's very positive news. And as you can see with reconciliation of cash and restricted cash, it's grown significantly as well. So these are great numbers from a financial perspective, and I like seeing assets growing year over year at a single point in time, and it's great to see that the net loss based on operational expense is decreasing, and as a result that will just demonstrate that the company will be a profitable company, specifically this small cap company. Now, in terms of stock data, right, we're all interested in seeing the price of the company's share price increase. Today, it's nice to see that it's hovering above the 16 cents range, although we know that previously it ramped all the way up to like close to 25 cents. Now, the question is, will it demonstrate the similar bull flag that we've seen in the prior months, right? For example, whenever we see a dip, we see an increase because based on the number of outstanding shares, it seems as though there's a number of investors that find interest in this biotechnology company and would take advantage of just buying shares. Now, the fact that the share price has taken a huge downward dip, close to about 50% from the initial increase, now we're beginning to see an uptick, and it's interesting to see whether the share price will start catapulting up vertically. I believe that it can, with all of the press release that will be coming in Q3. We know that the huge milestone will be entry of phase 1 clinical trials to start this quarter alone, as well as neuroprotection data on its THC VHS program, as well as other milestones to come. And we know that with its secondary product portfolio, CBD VHS, that's going to be coming as well, and we will hear data on its effectiveness from potentially getting into different multiple indications for use. So it's looking very exciting for Skye Bioscience, and I firmly believe if held long term, by the end of the year, the share price can easily break the $1 share price range and have a similar pattern to like Zomedica. And if you hold this long term for up through 2022, it can easily break $3 to $5 from my perspective. So let's not lose sight of the potential of this company being one of the leading pioneers using natural cannabinoids, bioengineering that product to provide medical unmet needs, at least for what we know now in the ocular disease space, specifically targeting glaucoma. The last ticker I wanted to share with you is an interesting company that's based out in Roseville, California. This is a medical device company that is researching and designing and manufacturing hearing aids. In fact, this is a class 2 medical device company where it provides direct to consumer self-fitting, self-adjusting hearing aids, self-fitting, self-adjusting personal sound amplifier products, as well as doctor formulated dietary hearing and tinnitus supplements that can really add value with patients that have problems with hearing. And its mission is to improve the quality of life of the 70 million people in North America who suffer from hearing impairment. That's big news. When you scale up and you look at this from a global scale, we know that a number of people up in the billions have this hearing problem. And that is why I firmly believe INND, if held long term as an investor, the share price will continue to grow just based on the niche that this company is in, as well as the company's products being much less costly, and it has an app that you can program to, and it really takes away the middleman of having to go to a doctor's office to have the healthcare professional reprogram the parameters so that it fits the needs of a patient who needs to hear more effectively. And this is basically an over-the-counter hearing aid product without being seen by a hearing healthcare professional. Based on volume, we see that the volume is about 93 million with the share price of at 1 cent. We know that previously in the months prior, back in February, the share price hovered all the way up to about 7 cents. I definitely think this is undervalued. So let's say if you are an existing investor or a new investor, here's an opportunity to capitalize on this very low price of INND's share. And we know that the CEO, Matthew Moore, he's actually elected not to take any salary payout. And that just shows that he has the purpose in really trying to execute on the business strategy that he's set up while having an e-commerce establishment with Walmart and Amazon, and focusing on trying to set up kiosks all around North America to really help patients who suffer from hearing impairment to identify whether they can benefit from this product. So that's why I firmly believe if held long term, this company can really provide value. And just based on stock information, as you can see, the share price had hovered up by 2%, which is a good thing, even though we've seen a downward decline looking at a 1 month range. In fact, broadening this out, I mean, back in April, February timeframe, we saw this ramp all the way up to like 7 cents. However, it's at the mid 1 cent right now, and let's say if you were to capitalize or dollar cost average down, I have high conviction that it will start catapulting up just based on news where it will become OTC Pink compliant. It's basically gone through the checklist, working with the lawyers to get the letter of intent. It's uploading its financial datas of prior quarters, and it's headed in the right direction. And INND, with its development, creating products for patients that need this product, I firmly believe that it will gain market share from its competitor like Ears. So that's my takeaway, and I hope that my perspective on the business strategies for iBio, Skye Bioscience, and Interscope Hearing Technologies has given you new insight on the fundamentals, as well as providing you technical analysis and forecasts on each company. Once again, thank you so much for watching another episode here at alliseeisW, and please make sure, let's say if you're new to this channel, hit the subscribe and like button to really add value to this channel, where we all are gaining on positive proceeds and leading with an altruistic mindset. Quack, quack, all. Goodbye.